What's up, boss?
Morning. Well, good afternoon.
Afternoon, how are you?
And you?
Good. So we're having a guest speaker today, so
Good.
we should learn a lot.
You know, it was on campus actually, I suppose, yesterday. Some type of investment or stock or something event about stocks and all of that.
Oh, really?
Yeah, and I signed up for it not realizing until the last minute that it said location on campus. So I didn't know.
So when does it take place?
It was yesterday.
Oh, and you didn't know, you thought it was remote?
Yeah, I thought it was Zoom, so I signed up for it, and I'm sitting here waiting and waiting for everything. And then I look and it said location on campus. I was like, I'll never make it.
Do you know who was the sponsoring club organization who put
um,
it together?
Let me see if I can find it. Or I could, if they still have it up there. Hold on.
Don't go crazy.
Because I'm really trying to get my foot in on this stock market.
Got it.
I know I'm a little late, but
Never too late to learn.
um, it won't let me go backwards. Oh wait, let's see if this is it. Oh, show past events. Let's see if it's here. Okay, here we go. Take a toll on your investments. Stop by and learn about how to invest in your future. Monday, it was yesterday at 3 o'clock.
Mm.
Yeah, I was like, oh, why didn't they put that online somehow? Investment information, tips, and guides on how to secure investments in the market and other platforms of currencies. And I'm studying, like sitting here waiting for the Zoom information.
Hopefully what you missed from that, you can pick up with this club.
Okay.
That doesn't sound like it makes any sense. May I ask who delivered that?
We're trying to figure that out.
There's no name on here or anything. It just says take a toll on your investments. It has the date, and it says location 300 Pompton Road.
I wouldn't learn. You'll be.
Hey, Joseph, how are you?
Under the
Hey, how's it going?
on your life.
Can you hear me?
Yeah.
Okay, cool.
Thanks for joining, man.
Hey, Pete, what's up?
You have a far better office than I do.
Come on, I've seen your play area. That's nice.
Where's that chair? It's an Amy, isn't it? Yeah.
It's my Game of Thrones.
Oh, jeez. Yeah. You're in it a lot more.
So Joe, I guess Peter already gave you kind of like the layout for the presentation today. We're gonna let you run. We're gonna start at 12:35 just to see if anybody.
I can't run.
Well, we'll let you lead the presentation if that's better. We'll start 12:35, see if anybody else pops in, and then we'll have maybe like a 5-minute Q&A after your PowerPoint, and then we're gonna go into news with some of the e-board members and other members from the club.
That's cool. Can you see the PowerPoint?
Yes.
Yeah, I'm behind a firewall, so Zoom does act a little weird from time to time. So I do hear you okay. I do not see the cameras anymore, so I don't know if you can see me anymore.
It might be in a separate window.
Let me see.
I also just gave you co-host privileges, so.
Cool. You saw my video. Do you still see me on video or no?
Yeah, I see you, and I could also see the PowerPoint. Are you able to see us?
For some reason, it stops it when the
All right,
PowerPoint
Chris.
comes up. It looks like it's sharing it now.
Happened to be on my cell phone today. My computer's having some troubleshooting issues, so
No worries. We're gonna get started in about 2 minutes.
yeah, and not the best.
So
day.
Chris is on the cell phone and Terrence is on the rooftop.
Yeah, Terrence is always somewhere we don't know.
I thought it was the best idea to restart and make a recovery disk for my computer 30 minutes before the meeting, and I didn't. No, I don't know PCs, man. I've had a MacBook for 15 years, so I just got this PC 2 months ago. But I love it. Microsoft is great, you know. Like 365, you can't complain.
Here we go. Okay, let's go ahead and get started. It's 12:35. Good afternoon, everybody. Thank you for attending. Second meeting this semester for Student Investment Club. Today we have a guest speaker, so we have Joseph Gagliardi. Do you prefer Joe or Joseph? Okay, Joseph. So he's going to go into a lot of what his company does. He's going to give us a bit of background about himself. He's also going to go in depth about ETFs, exchange traded funds, the creation and redemption process of that. It's relevant to us because that's the route we're going to take as a club as we transition from a long only value fund into ETFs. So it should be very relevant for us. We'll have about a 30-minute presentation from him. Hopefully we'll have 5-minute Q&A after, and then we'll go into current news with some of the members and e-board members of the club. So with that, take it away, Joe.
Okay, I'm not sure if that was just me, but there was some choppiness. Was that just on my side?
By the way, I didn't know if this is a small meeting, so I just wanted to introduce myself. I'm Chris Nessie. I'm a graduate student at William Patterson.
Nice to meet you.
Okay.
I,
Nice to meet you.
I can hear you well. Can you hear me well, Joe?
It's not a small meeting.
All right, cool. As long as you guys can hear me well, that's fine. And I'm gonna film my video because it's presenting some issues. All right, cool. So my name is Joseph Gagliardi. Really appreciate you guys having me here today. I've been in the financial services community for the past 22 years. Currently work for Broadridge Financial Solutions. I did my undergraduate at SUNY Stony Brook. I did my graduate at Baruch Sikman School of Business. I have my Series 7, 63, and 55. I started my journey in the financial services community at Depository Trust Company, DTC, pretty much the bloodline of the industry. Worked down at 55 Water Street, downtown, underground in the vault. So it was pretty interesting. Showed up for my first day at work, in a suit, 55th floor. They interviewed me and they sent me down to the underground to work in front of the vault for 2 years. So that was pretty cool. From there, I went over to work at US Trust. I worked on their venture capital services desk. That gave me a pretty good view of the end-to-end product offering from both trading and back office. From there, I went over to Charles Schwab. Worked on their capital markets area, ran their middle office trade support. That was divested over to UBS. I stayed at Schwab, did some project management work for 2 years. So I wanted a career change and then went over to Broadridge, and that's where I've been for almost 15 years. So for the most part, I've been middle office, back office. Started All right, let's give you a little overview. Give you an overview of itself as a company. So we're a publicly traded company. We're a global fintech firm. Our ticker is BR. We are traded on the New York Stock Exchange. We have revenue of over 4.5 million. We are part of the S&P 500. We have over 17 billion market capitalization, over 500 million free cash flow, over 12,000 associates, and we operate in 16 countries, offices all over the globe. We operate a handful of verticals, one of them being investor communications. We process roughly 6 billion customer communications annually. So basically, obviously, all you guys have purchased stock, so if you receive proxy voting, things of that nature, whether it be via email or actually physical mail, most likely come from Broadridge. So all that vote material, we process that on large scale. So being a fintech company, we provide technology solutions across the financial services marketplaces. So both on the capital markets and wealth management side, we have a strong offering across all these segments. We process over 6 trillion in equity and fixed income trades a day. That's not taking into consideration what we've seen over the past year. Obviously, with the pandemic, those volumes have skyrocketed tenfold. And even most recently with the short squeeze that we've seen, those volumes are much more tremendous than that. From a technology processing perspective, we process in over 80 countries, so we're multi-asset and multi-currency solutions in all the products that we support. Any questions about just the state of what Broadridge is about? Okay. So the division I work in is called the BPO. It's called Business Process Outsourcing. And what we do, we provide financial services outsourcing to the financial services industry. We're housed within a FINRA regulated broker dealer, and for the past 40 years, we provided this service to the industry. We service 46 clients in the wealth management, capital markets, and asset management space. We would combine all of the clients that we service into one entity. We would be servicing over 39 million customer accounts, have a 1 trillion AUM, and process over 5 million trades a day. We're not like the Army, we're more like the Special Forces, meaning we have roughly 1,000 operational SMEs located across the globe. And 40% of the associates that we have within these roles are sourced from the clients in which these engagements come from. So it gives us a very good bandwidth from a processing perspective and also from a diversity perspective. Our associates hold over 150 licenses within the community, and we're also part of both industry and Broadridge initiatives within the community. We have 8 follow the sun locations across the North America, EU, and India, and we offer a library of over 30 complex middle and back office functions in our offering. We like to use technologies such as RPA. We have an enterprise risk management solution that we have, and also a BCP thing. From a job migration perspective, we've taken on the roles of over 1,500 people and processes within the past decade into our offering. So we offer our clients this mutualization approach. We have a very mature governance perspective. We offer tools that provide transparency to the workflow that's being done, and that also gives us a layer of risk mitigation. And being a fintech firm, we also believe in transformation and innovation and being part of this big value added proposition that we have, that as part of our offering, you're one in numbers with being with Broadridge. Any questions about the BPO in its offering? Okay. So our core offering, when you look at it from a securities operations perspective, when you think of, say, E-Trade, or even a client that we used to have, you may be familiar with, Robinhood, is the true back office operational functionalities. So this is a placemat of all the operational functions that we do for a broker dealer within the company. So from a trade processing, asset servicing, tax reporting, these are all the things that happen within a broker dealer that get outsourced to our company from an operational perspective. So when we have a deal, we work with the target company, go through their processes, and then assume all of those back office operations, and we take them on and do it for them on their behalf as an extension of their operation. So when you're sitting in front of your computer and you're executing an order, say on the E-Trade website, or you're selling short of stock, those operational functions that happen in the background after you hit that execution, that's what we're handling in the back end. Does that kind of make sense? So also, being a fintech firm, as Broadridge acquires different solutions or builds out their solutions, we like to wrap our BPO offering around those technologies. So one example is how we have these other offerings within the buy side. So we have these portfolio solutions, these portfolio master accounting solutions that we have, where we've taken those technologies and now we've inserted our people offering around that to create a middle office solution around that to offer to this bigger segment from a buy side perspective. So predominantly, we started off our offering in the sell side, the traditional sell side broker dealer offering, and now we're expanding that throughout the buy side. We've also did that same thing through acquisitions through ClearStructure Century. This was a loan processing solution where they invest in debt and currencies across a global realm, and we wrap those that same kind of offering around our people solution. So we have the global footprint in the emerging markets for debt structure, that we have people actually servicing those areas in those markets from both perspectives.
Hi,
Another,
good afternoon,
which,
Joseph. Can I ask you a quick question?
Yes.
So
Sure thing.
are you the servicer of like for Schwab, if you are servicing E-Trade, you guys are basically the third party that's handling all of the transactions?
Yes.
Okay, thank you.
Or do you have an account there?
No, I don't.
Oh, okay. I was just curious how what angle your question was coming from.
Well, I was just trying to understand, as Broadridge, that essentially the customer is interacting with you as opposed to E-Trade, is if I'm getting this correct.
Sure. So I'll paint the picture a little broader for you, right? So Broadridge, being a fintech firm, has these back office technologies that Schwab and or E-Trade purchases to run their systems on. So, Schwab or E-Trade has their front end, but those are all plugged into core technologies to do a lot of transaction processing, like books and records and different avenues to connect to depositories and do other financial transactions. So that's the fintech side of it. On top of that, there's this BPO side, which is where my area comes in, where we wrap the people around the work in doing those processes on those technologies. So for instance, if you were looking to transfer your account from, say, E-Trade over to Schwab, and you submit your paperwork and something wasn't filled out right, yes, one of my associates may reach out to you and say, hey, I'm sorry, who asked that question?
My name's Kiara.
Kiara. Hi, Kiara. Hi, this is Joe calling from Charles Schwab. You didn't fill out this form correctly. We need you to resubmit this to us. So, yes, there is that connection where we would be potentially reaching out to customers on their behalf. Does that make sense?
Yes, it does. I that's what I assumed, but you went a little bit further. But thank you so much for that clarity.
Sure thing. Was that a little more clear for everyone else?
Yes, it was clear.
Was there any other questions around that or clarification? Okay. So one of the areas of that we're looking to expand into is exchange trade derivatives or futures and options. We have a global processing engine that handles this from a back office perspective, but we've seen a lot of interest from FCMs, those are financial commissions merchants, to have an offering or a utility to have these back office processes done outside of their own domain. So similar to how I was saying from the sell side perspective, we're looking to branch into this avenue in the futures and options perspective as well. So we have a pretty big campaign going on now with a lot of promising clients that are looking to get this up and running. So this is going to be one of our big growth opportunities within fiscal year 2021. So being a fintech firm, and what's pretty cool with being in the BPO is that we can leverage a lot of the the interesting and cool technologies that are out there. We have the ability to cultivate our own tools within our our unique organization. We've developed workflow solutions that give more transparency to the client to see how their things are interacting within the space. We've worked with a leader in RPA development called UiPath to create robotic process automation. And we've actually invested within our own associates to have them become what's called citizen developers, where they were certified in the automation process and work with the true development staff. So you have that operational expertise working with development to create the automation to make it more seamless. We also have worked with machine learning and artificial intelligence within our technologies, so that you can actually have we have this reconciliation tool where artificial intelligence is used to actually look at breaks and sort of give descriptions on what the break may be, just based on past experiences of what the system has seen was done by what the associates have done in the past. So it gives it gives prescriptive definitions based on things that have happened beforehand. So it really gives an uptick to what we offer as a value add to our clients. So just to continue that same theme, I'll skip over this, but one of the clients that had come to me about 10 years ago, State Street Global Markets, the broker-dealer arm of State Street, said they want to get into the ETF arena. And, you know, one of the things I really enjoy working with this within this group is that as our clients' needs and change and evolve, they look to us to help them sort of with their journey. So since they want to get into the ETF arena as an authorized participant, you know, it was all new to them. The State Street had, when it was an agent and was, you know, facilitating their own ETFs, but this was a new space for them. So let's just dive right in for a second. I'm sure all of you know what an ETF is, right? Shake heads for yes. No, I see a no. Is that Chris? Okay. All right. So we'll quickly go over the attributes of an ETF, right? The ETF is an exchange traded fund. It's traded like a basket of securities. It's traded just like a stock. The price fluctuates throughout the day, not like a mutual fund, which is priced at the end of the day. The unique aspect of an ETF is how it actually gets created, or the genesis of the ETF. Not traditionally like a stock where they work with the shareholders and then they come to market. An ETF actually has to be created, and to be created, you have to be authorized by the portfolio to actually create the ETF. So let's look at the key players and roles. So the ETF sponsor, or the agent, is the fund manager of the ETF. So that's like your BlackRocks or your State Streets. They make the financial decisions behind the ETF and what goes into the ETF. They come up with the strategies behind it, and they keep track of their investments, and they make all the investment decisions. Then you have your list of authorized participants. Those are the people who are authorized to create and redeem the ETF. And the ETF sponsor picks a handful of broker dealers who are authorized to act on their behalf to do this. The ETF agent and or custodian, usually they're one and the same, is the connecting point for all of these players. And they work also with the custodian, with the depository to transact, to move all of the positions back and forth between the ETF. So when, say, State Street wants to make a spider, and there's 150 names in that spider, that's what they call the creation process. So I'll walk you through the creation process. Now remember, this all happens before actual secondary trading of the ETF. This is before the ETF is actually traded on the exchange. This is actually creating that unit of that spider that you're going to be managing in your portfolio. So step one is State Street says they want to create one unit of the spider. So the authorized participant goes out to the market, buys all of the 150 names that are in that basket of that ETF. So they actually execute 150 trades. Upon settlement date, that authorized participant delivers all those underlying components or constituents to the fund. But they don't deliver it directly to the fund, they deliver it to the fund's agent and or custodian on settlement date. That agent and or custodian has a record of all of the funds outstanding position of the underlying ETF. Upon receipt of all of those underlying components, the agent will then send the actual ETF back to the authorized participant in exchange. So the authorized participant sends all those components to the fund. and then the fund in return sends that one component back to the authorized participant. That authorized participant then sells that one unit on the secondary market, in which in turn is now it's trading on the exchange. All those operational processes that happen in between those steps are done within my organization. And also State Street came to us and said, hey, how do I perform this? Meaning, how do we take record and track all of this? So we helped them build a tool to track all of those movements on their books and records of when they're creating and redeeming the units for the funds and introducing them into the market. Similarly, the redemption process is exactly that. If the fund wants to redeem an ETF, then the authorized participant will purchase the ETF from the open market, submit it for exchange, and then they'll get back the components. And then once they get back the components, they'll sell those components in the open market. Does that make sense? Any questions? Okay. All right, so just to backtrack a little bit. So we have the sponsor, the ETF, that's the actual fund. The authorized participant, they're a market maker. They're the ones that are controlling the actual liquidity of the ETF in the marketplace. As the ETF's prices fall or go up and down, the authorized participants can sort of contract or add liquidity of that ETF into the marketplace by creating and redeeming. My company, as I had said, created a tool for the authorized participant in this example, because we saw a need that the industry did not have such tools in this arena. We saw there was more focus on the agent and custodian side that had the tools, but the APs didn't. So we brought that to market, and we were successful in having a broad marketplace for APs that were now on our system. One caveat to this, just to take this a step further, I'm not sure if you guys are familiar with this, but there's a new trend in the marketplace with ETFs where they're called non-transparent or active shares. That's where the underlying components of the ETFs are not actually disclosed to the investor. It's done on a confidential basis. So there's actually an extra step in the creation and redemption, where I had said the authorized participant was the one that does all that purchasing and selling of the components. Now, the authorized participant has what's called an authorized participant representative. So the authorized participant now is the only one that can create and redeem. However, they don't know what the pieces are of the underlying, because they're contracted with someone called an authorized participant representative that holds everything in a confidential account to do all the transactions and then works directly with the sponsor. So it just takes out one more step, because everything is confidential in the process, and all the components and everything is and the underlyings are not disclosed. It's a fairly new new concept. I think it got okayed by the SEC within the past year and a half. But one of them is called Presidian Active Shares, if anyone has any interest in looking at any further.
Presidian Act?
Presidian Active Shares.
Sure. And what would be the benefit to this? How is this helpful to the investor to invest blindly, perhaps?
There's more tax advantages.
Gotcha. Thank you.
Sure. I see we are coming up to 1 o'clock. Does anyone have any questions?
Yeah, I have a question real quick, Joe. Can you elaborate maybe on the vetting process that an ETF sponsor would go through to find an authorized participant or specialized investor to conduct all these transactions?
What was the first part? I missed the first part.
So how does an ETF sponsor go about finding an AP to handle all these transactions for them?
Oh, okay. Sure. I mean, it's a broker dealer. Usually it's fee based, or if they have other kind of relationships with the broker dealers to conduct this kind of business. There's probably about 15 to 20 different authorized participants in the marketplace.
Sorry, what was that number again?
15 to 20. Any other questions?
So I guess we can open it up for Q&A if you guys have a question, feel free to unmute and ask.
Yeah, I have plenty of questions. I'm just having trouble with my cell phone. I have an Apple cell phone and a PC laptop, and I just was not a good morning. But I was just wondering, first of all, how you basically, when you brought up the last time I was in the chat, you brought up futures and options, and I know like options are a widely played practice. I guess futures are too, but what does that have to do with ETFs? Because I don't believe people do options or futures on ETFs, do they?
How does it do directly with this content that we spoke about here, or just generally? I'm not understanding your question.
Oh, just do people do options trades and futures investments on ETFs, exchange traded funds, and or
Oh no,
or
no,
is
no,
the-
no.
were you talking
No.
about stocks specifically at that
No,
point?
no.
I'm sorry, I lost.
Okay.
I was out of the meeting for 10 minutes.
That's okay. That's okay. No,
Trying to make up for it.
That's okay. One of the areas, I'm going to send this presentation out afterwards. I'll give it to Pete in a PDF form for you guys to ingest a little bit more. That's just one of the other business lines that we're looking to expand upon within my division, based upon technology offering that we have. There's futures and options, not specifically related to ETFs.
I was wondering because I'm one type of options fan. I know no one else is. I'm a covered call options like risk kind of hedger, if you will. I just wanted to know, is it much harder making money or making profit off futures? Like, how does one make profit off of futures? Like, that's one thing I really do want to know.
Yeah, that'd probably be a question I would have to, and I wouldn't be able to answer that. I'm sorry.
Yeah, I know, because I mean the futures market opens at what, like 6 p.m. and then what, you're up all night like trying to figure out what stock price is pre-gaining, and then it's kind of, is it like day trading in a way? I mean, I've never heard really futures being really a big hot, viewpoint in the stock market.
Futures market's 24 hours, depending on what market you're talking about. You're talking about just U.S. futures?
For now, yeah,
Oh,
like US, because I like post market, like price fluctuations, they can go through the roof, and then all of a sudden, when the market opens, it crashes 20%.
Yeah.
So how
No,
did one predict? Like,
yeah, honestly, I'm not equipped to answer that. I apologize. like I said, most of my time has been served in the middle and back office, so I can't really opine on that.
Yeah, just like I'm actually not gonna get into futures. I just wanted to know what a futures trader looks at, like what they really aim to do, like what their strategy is, like because futures
I'm not
markets I
sure this
feel
is the
are
forum
good
for
for
that right now, Chris.
what?
Yeah. Chris, let's hold off on that question. We have one more question because we're already 1 minute over for Joe. So we'll have to go back to that another time. But if anyone has one last question, then we'll let Joe go.
Yeah, I have a question.
Go ahead.
I was just wondering if you could explain like how the fees work, because I always see like there's, I know different ETFs charge different fees, and how much that should count into the ETFs you pick. Because I'm relatively young investor, so I don't have a lot of capital. So I'm always wondered, like, if you don't have that much capital, if it is beneficial to invest in ETFs, if you're going to have those fees, or if it's better waiting until you have more money.
I mean, generally speaking, ETFs do provide a better appetite because they do offer lower fees. I mean, but quite honestly, I can't give investment advice in a forum like this.
Yeah, completely understand. We don't give investment advice as a club either. So I think if nobody has any questions, maybe we'll just wrap it up here. Joe, thank you so much for your time. This was very informative. The session's also being recorded, so once we get this up on a drive, if you want, we can definitely share it with you, and appreciate it. And maybe we see you again in next semester.
Last question. I have to keep you here. I just because I missed out. I just want to get to know everything. What got you into ETFs over stocks? Just real quick.
What got me into ETFs over stocks?
Yeah.
Oh, one of my clients was looking for a solution to solve for, so we helped build a tool for them to get into the business.
Cool.
But I'll share the information and then Pete can send it out as a follow-up, all right?
Awesome. Thank you so much again.
Yep. All right. Take it easy.
Take care.
All right. Bye.
Alrighty. So I guess for those still in the call, we're going to move on with the next part of the agenda. Hopefully that was informative. Hopefully somebody learned something. The next part is actually Chris. Chris is going to take over for about 5 to 10 minutes, and he's going to kind of summarize this article or summarize this podcast that he listened to. Kind of touches on ETFs again, just goes into ARK, his fund asset management, kind of their approach to ETFs, things like that. So Chris, if you want, take over and tell us what you learned. You are just on mute though. Chris, can you hear me?
horrible. I just reset my computer. I should have stayed on my cell phone.
No worries. We can hear you now.
I I should have stayed on my cell phone, but I can do a screen share of a Power BI presentation that I made about the Kathy Wood ARC Funds ETF. But regardless, basically, Kathy Wood, the podcast I listen to, the ETFs are by Kathy Wood, but she gets a lot of help. She has 5 different portfolios, and there's only a tiny number of stocks that have like not risen. In fact, over 152% over the year. So it has this kind of cult following, as they call it, apparitionable following. And the hold on, I'm trying to find this. Oh yeah. I'm sorry, I'm trying to find the Zoom. Yeah. And this like cult following because they're pretty stable return ETFs. And so basically they're rivaling BlackRock's iShares, which is, everybody knows iShares. If you're an ETF, that's probably the #1 ETF of millennials, I'd say. He interviews Brent Winton, who worked with Kathy Wood in 2007 at AllianceBernstein. And Brent Winton's really smart. They started ARC Research in 2014. And so Winton doesn't think what he's doing is stock picking for this ETF. Basically, he thinks he's kind of looking at disruptive technologies based on what's called general purpose technology theory that focuses on steep cost declines and price inefficiencies. So in the long term, you have this like demand elasticity and cost decline process. So over the 5-year term, they're looking at very long term. It's almost like a bond, I want to say. They're not looking shorter than 5 term, these ARC ETFs. So don't be surprised if there's not like a 3% return even yield or payout, net asset value, like how ETFs pay out. They're looking at the very long term here, and they're not doing discount cash flow models for valuations. They're not even looking at price to earnings ratios or price to sales. They're pretty much just looking on, I'm going to say GPT, general purpose technology theory, value investors and intangible assets with a time horizon that quote unquote matters. And these inefficiencies, in my opinion, as of now, they're starting up. I mean, 2014 is relatively new, in my opinion, for an ETF. So I'm gonna say they're mostly blue chips. So you've got like Square, Tesla. Square owns Cash App, and Tesla owns everything in the world. But what's fascinating is their cross-sector analysis, and that's going to expand this ETF further. Basically, instead of looking at Tesla as the blue chip company we all know that's valued high, and you can make YOLO options plays on Wall Street bets for $200 a week, but that's not what Brett Winton and Kathy Wood are doing, as well as their team. They're looking at Tesla, for example, in the face of batteries, doing radically new analysis through these inefficiencies where technologies are misunderstood and can be exploited. So, for example, something like lithium. that's a technology, that's a commodity, but batteries, they're looking at Tesla in the face of batteries. And a battery is not just for an automotive industry. You're crossing a sector when you're doing a battery. Now you're going into utilities. So you're not specializing in a specific sector. So I think this cross-sector method is really innovative, and it's going to be copied by a lot of fund managers pretty rapidly. But I think these are the pioneers. And they have genomic revolution, space exploration ETFs. They're beyond, they're above and beyond. And they're very transparent, and he's willing to be honest. And I think he was ecstatic about being interviewed on a podcast. And if you'd just like to see some of the ETFs, that can you see my screen?
No. Can I just add a point, Chris, to what you just mentioned?
Oh, I was just gonna share this.
There should be a share screen button at the bottom. Perfect.
Yeah, this is these are the shares and the percentage of the ETF by it's blocked. So you have the 5 ARC-F, ARC-G, ARC-K, ARC-Q, ARC-W. You've got like Twitter, Pinterest, DraftKings. That's one ETF, and it's pretty stable, the amount of shares. You've got 436,000, 329,000. Basically, the percentage of shares is like 0.31%, 0.33%, 0.18%. She likes putting her eggs in kind of like 2 baskets, I'd say, from what I've seen. She really like eyes out 2 companies and likes to milk them. That's what I've seen with Kathy Wood. And she really somehow, I'm not sure how she weighs her portfolio, but she does it very well. That's all I have to say.
That's a really good summary. The one point I wanted to add is with the analysis that they do, like they mentioned and like you mentioned, they don't create DCFs because they think that it can be manipulated with the discount rate that they have on the DCF, nor price their earnings. But the idea is that if they were to sell this company 5 years out, what price will that person have to pay given the cash flow generation of that company or of the business at that time? So it's a completely different approach than maybe some people in the market when they do their fundamental analysis, right?
Yeah.
Yeah. So I think it was pretty interesting. I gave it a listen too. So thanks for that. We appreciate it.
It was a short podcast. It was very informative though. They have some other good podcasts if you want to get that podcast out there.
So
Bloomberg.
we're speaking of Odd Lots. It's on Spotify. I think the person being interviewed, he mentioned he had a podcast. Do you know it by chance? Or did I hear that wrong? Chris.
Yeah, I'm sorry. Oh, he had a podcast. I didn't listen. I wasn't. He seemed so like esteemed that he was being on Bloomberg that that I wasn't really like focused on his credentials as much as what he had to say. So I'll take a listen again.
Got it.
If I could jump in, Joe, you could share the link when you share Joe's presentation, and then they'll be able to listen to it as well. And my guess is his credentials are pretty high because ARC is a tough spot to get into.
Got it.
And just one more thing on that, and I was listening to it from a second, just like you guys were just discussing now. I had something else going on when I was listening to it. I might be off, but one of the basic premises they made that, like you said, people ineffectively forecast 5 years out. They fail to take into account certain changes. I loosely heard you say lithium-ion battery. Yeah, one of the things is if you were to look back 6-7 years ago, they would say batteries cost $1,000. They'll never be less than $250, right? No matter what you do. Batteries are currently at $125 and they're still going down. So that's the kind of imperfections that seem like they were taking advantage of. And I'm gonna again mute myself.
Okay, yeah, just one. Can I add on? I'm sorry.
Go ahead.
I'm like, this is a joy to me.
Go ahead.
I love ARC. But what I really liked most about ARC is the team's patience. Because if you look at a Fidelity fund, an ETF, like a fund that I like, Asian, South Asian markets. It was innovative like economy in South Asia. The fund started in 1997 with a share price of about $7. 1997, and in 2021, it's about $100. So ETFs are turtles, I feel, when they grow, and the fact that they're already saying they're kind of, to the average listener, this is a 5-year or no go type. They're in it for the long run. I think they mean business.
Awesome. Thank you for that. So we got about 5 minutes left. Callie, did you want to close with some news? You can get through as much as you want. We can always pick it up next meeting, but the floor is yours.
Sure. Well, since we don't have time, we can kind of cover one topic on the news right now, which is about gamblers in the market. I was reading about it on the Wall Street Journal, where they were talking about how left-leaning economists want to put more per se more regulations to kind of restrict gambling in the market, especially with what been going on with stop thing something. Because there's like a lot of gambling in the market right now. People are not even speculating because they don't have knowledge about what's going on, mostly because of the old Reddit thing. People are just like going in the market like a casino per se. I don't know if you guys been reading about it, but that's what I was reading about in the Wall Street Journal. I have a few other news from to continue on the gamblers thing, because we're talking about Robinhood putting restriction on trading on GameStop, because there was like so many money that needed to be handed out and they couldn't do that because of the way the TTC is currently processing money, and that was like way too much money for them to process that day. So they're demanding for a bit more modernization on the way the TTC process money, which is roughly around like $1.7 trillion in a day. If you don't know what the TCC is, it's basically responsible for clearing and settling stock trades, like post trades, like for you to get your money, buyers get the money back and sellers get the money. But that's about it. What do you guys think? You guys heard me, right?
Yeah.
I personally think the Robinhood restriction trading on GameStop was one of the smartest moves they could have done to save themselves from a lot of SEC lawsuits, first of all, and to really further their semi whatever they are brokerage future of the stock market, to saving millennials a lot of money and probably potentially putting a lot of people, making people go broke because people think GameStop went up this is a short squeeze. This is going to happen every so often. Let me follow this because it goes up 800% for a day, and now it's being investigated, but no one knows. But I mean, I think they did the right thing by restricting trading on GameStop. I think that was the first thing that they did that was actually responsible, actually.
And how do you guys feel about left-leaning economists suggesting to put more regulation in the market? Because that wouldn't be affecting people who's gambling only. It would affect all traders in general.
So if I'm understanding it right, Callie, these people, they want to maybe impose restrictions or possibly even a tax on trades that are done in the market. So people trade it or treat it less like a casino and more like the purpose that it was actually used for like the proper allocation of capital. Is that right?
Yeah, exactly. But if they're putting more regulation on it, it's not only gonna affect people like us analysts, people who's like who knows what they're doing in the market. It's gonna affect those people too. It's not gonna affect people who's just like buying shares because they only hear people like it's going up, like game shares. So, what do you guys think? Do you think we should have more regulations? And if so, what do you think some of the effects of that would be?
You do have a lot of regulations with the Biden administration. The capital gains tax is at 38% right now. So anybody for the top 1%, 2% investors, they want to, based on their cost basis, like if they want to get money from their investments based on capital appreciation, at least, are paying 38% tax, at least from the start. And that's a lot of money. Especially when it comes to how the bull market is going right now, and probably the people who are invested in the companies who are making actual money off capital appreciation are not happy about it, but it's contributing to the overall infrastructure of the economy. And I think the stock market's changing in the way that it's actually becoming this positive thing. I think this is on a super tangent, but Elon Musk like wants to change, like, in my opinion, global warming. Like Tesla would be an environmentally friendly company. Like that would be an honorable company to invest in. Like you're looking at this, the stock market is changing. It's kind of like banks were greedy in 2007. We had a crash, and now we had this Trump run in the mid 2020 with COVID and this tech bubble. And now things are all over the place in different sectors, like starting to even out. And there's this high tax imposed on it, and it's helping the economy, and it's helping, I think, grow different sectors of just environmental friendly things and nonprofits. Biotech, you could argue that the mRNA vaccine was partly due to the investments in Pfizer and BioNTech. I think investments are becoming more crucial to the economy. And I don't like the connotation of gambling when it comes to investments, and I hate defending myself, actually, when it comes to that. So I kind of keep it low key.
All right. So we do have a hard stop of 1:30. I think this was a very good meeting. Thank you, Callie. Thank you, Chris, for bringing the news to our attention. I think Peter might have one thing to say. If you could hear me, Peter.
Yeah, I just want to say one more thing. Joe already sent his PDF, and I encourage you guys all to look at it for several reasons. And one is you really should understand what the operations are. If you're going to be investing in it, if you're going to be doing it even through S&P, you need to know what's going to go wrong, right? And so there's a lot of, once you go this ETF route, there's a lot of things that we could talk about in meetings, like what happens to price discovery, what happens to proxy voting. Is there a scenario where if the market's doing really poorly, that the ETF is not going to match up with what the market says? And so also, by the way, of course, there's a lot of jobs in that space, right? So that's kind of like why we introduced that today. I realized maybe it wasn't what we normally do, but it's still kind of important. And that's all I'll say about that. And I'm going to log off now.
Thank you, Peter. So we'll close the meeting with that. I have the deck in my inbox. I'll forward it to everybody. We'll meet again in 2 weeks where we have another guest speaker. I'll send a description out as we approach that event. But as for today, thank you for attending, everybody, and we'll speak soon.
Have a good one.
Thank you.